to ET Now Startup Central. I'm Natharajan. With the next 30 minutes, we'll be bringing you India's daily and only show that is dedicated to startups as well as entrepreneurship. It's a power-packed show lined up for you, and let's get straight down to it. Today, we will be focusing on the year that has been for funding, the yearly funding meter for startups as well as entrepreneurship. Of course, this is going to involve VC investments as well. We saw a whole bunch of new unicorns entering the universe. The chart for you on your screen lines up the big VC deals from Oyo Rooms to Swiggy to Byjus. This is the annual funding meter for you, reaching $7.5 billion across 470 deals. The number of deals may have gone up, but more importantly, the amount, the figure that we're talking about is much larger. So if you had 500 plus in 2017, it was spread over many more deals. Those are the big companies for you: Oyo, Swiggy, Byjus, Paytm Mall. These were some of the biggest investments that we saw, and we have decided to not talk about Flipkart and Walmart over here. That was, of course, a $16 billion mega deal. And the level playing field has been changed in the last month of 2018. All eyes now on Walmart and what it's going to do with the $16 billion deal. So that's the breakup for you on your screen when it comes to the angel funding. And in fact, we've decided to break it down round by round. That's angel, Series A funding, Series B funding, and that's how the year has been. And you have seen a decline in activity when it comes to Series A funding. I'm going to now discuss this at length with my two guests, the two gentlemen now joining us on Startup Central. We've got Arun Natarajan of Venture Intelligence, and we are also being joined by Sanjay Nath, the managing partner at Blume Ventures. Good evening, gentlemen. Thanks so much for joining us. I'll come to you first, Arun. You know, even if you were to look at it outside of startups, and 2018 will go down in history as the biggest year for deal making for M&A activities. The first time we crossed $100 billion, and you have to say a large part of that is thanks to startups and entrepreneurship.
I'm not able to
Arun,
hear.
if you could hear me, good evening.
So,
Arun, if you could hear me. Good
hi, yes, I'm able to hear you. So, indeed, yes. So, no question about it. 2018 was a landmark year in terms of venture capital investments in India, and it is really on the back of mega investments in startups. The ones that you named. OU, of course, you had Byjus and so on. So that's really put India back on the startup map of the world, I would say. So the number one standout feature is really the big ticket deals. So we've, apart from the two $1 billion investments which went into OU as well as Swiggy, we tracked as many as 13 investments which were either $100 million or more in terms of value, and that clearly shows that the growth capital investments really were driving the headline numbers to as much as $7.5 billion. So if you look at kind of who are making these investments, very interesting mix that is emerged. So SoftBank with its investments in whether it is the Paytm group or Policy Bazaar, or of course OU. That was one group clearly that led the way, and then you had Tencent and its associated investors coming in very strongly towards the end of the year, especially with both Byjus and Swiggy, and of course Alibaba has been backing the likes of Zomato and Big Basket. So this is clearly kind of aligning of investors that took place during the year. And then of course you cannot leave out the fact that there are 8 new unicorns that got created this year. 5 of them, of course, in the consumer side of things, including Swiggy, Oyo, and so on. And then even in the B2B, there were 3 unicorns, including Freshworks, Udan, and so on. So, and last but not the least, the trigger for all these mega investments in our view is indeed the Walmart acquisition of Flipkart, putting $12 billion back in the pockets of the investors, with healthy returns. And that really is what we described even then as an earthquake of a transaction that triggered a tsunami of investments, ever since then. So, out of the $7.5 billion, more than $5.3 billion got invested in the second half of the year. So, that really shows how much of an impact.
Yeah, Arun, the problem with discussing the Flipkart-Walmart deal at the start of 2019 is that very earthquake and that very tsunami may create a tsunami for deals drying out in the new year. I'll get to that in just a bit, and what I'm getting at, particularly thanks to what happened in the last month of 2018, with the government changing the rules of the game once the money was in. But let me just invite Sanjay over here. Taking forward from the other points that Arun was making, would you now concede there is a troika, SoftBank, Alibaba, Naspers, which is calling all of the shots, or pretty much all of the shots when it comes to funding of startups? And do you think that this trend is going to continue into 2019? We have seen a leadership change of sorts at Naspers as well as SoftBank. How do you expect all of that to pan out in the new year?
First of all, Happy New Year. Great to be here. Great for Blume Ventures to be on the show. There's always a troika, right? We're always looking for a trio. So yes, I think it's great to see SoftBank back and Naspers and Alibaba. I think what I will say is that it's been a little more restricted to the consumer side, right? We also have a very active and burgeoning B2B side. If you looked at Freshworks, you look at Udan, look at our own Grey Orange. I think there's that other segment that that's going to be up and coming. It's not as sexy or glamorous, or you're less likely to see the $4-5 billion valuations there, and maybe fewer unicorns. But I think let's not forget that space. Coming back to this, I think yes, it's great to see this interest. SoftBank's got a new vision fund from the information I gather, and I'm sure Arun might have better data. I think that India allocation for the last SoftBank fund was already exhausted, and I think they're going to look at India again from this new fund. I think it's great to see Naspers again come in really big, and of course Alibaba is there. But let's not forget, the new breed of Chinese and South Asian investors, right? You've got Shunwei, for example. You've got CDH. You've got Morningstar. Happily, many of these have come into Blume's own companies. Vocal, MechMocha, Cashify, to name just 3. So yes, it's positive. I think that what they're basically seeing is that India is a market you cannot ignore, right? The comparisons to China are not necessarily true, but you can't afford not to be here. You've got 200-300 million internet phone users. You've got 4G making broadband access literally free. You've got new sectors like agri-tech and of course edutech, financial services, and fintech taking off. So it's not just these troika, but I think this troika, but it's going to be a whole host of other Chinese, South Asian and Japanese investors that are going to come into the wings, and I think we're looking very bullishly at 2019.
Okay, so now that we've set the ground straight for the year that was for 2018 and the likely early trends for the big players that may dominate the scene in 2019, let's get down to the specifics. Arun, let's get done with the elephant in the room. We were talking about Flipkart and Walmart. Look at what the government did in the last month of 2018. Walmart is possibly staring at the prospects, the horrible prospects, that it may have to write down a part of its investments, the largest investment it's ever made outside of the United States. Let's also not forget that the same government did a googly of sorts as far as the angel tax issue went, which then had to be reversed. That that circular has now been put in abeyance and has finally been withdrawn. The kind of messaging that has come into the Modi government in the last 1 month, has it rattled the startup universe? Has it rattled investors?
So, while the angel tax has clearly attracted a lot of attention, the space that we are talking about, in this context is really, institutionalized investors where, there is no such, major issue of this angel tax per se. These are SEBI registered funds and so on. While there is clearly, a discordant note between the tax department, but the intent is quite clear, from the ministry. But just to return back in terms of the the early stage, which is where you are referring to, that has indeed been a bit different from the very powerful growth that we have seen in the later stage investment. So that must definitely be considered, because ever since 2015 we have continued to see a slide in the number of investments. While the value has gone up tremendously, the number, especially in the early stage, has actually shrunk by as much as 40% when compared to 2015, and year on year we've been seeing a slippage. This is really the seed and series A kind of investments, where the numbers have come down 15% even compared to last year. I'm talking about the number of transactions. So that indeed is a challenge, and angel, as you rightly said, in the last quarter it has been a dampener. In fact, compared to Q3, Q4 was even down 50% in terms of structured angel investments by the super angels of Rajan Anandan and people like that, and then the angel networks like Mumbai Angels, IA and so on. They did slow down quite a bit towards the end of the year, and definitely the angel tax is not helping in the early stage side of things.
So that's a venture intelligence point of view. Sanjay, what do you guys at Blume Ventures have to say, that even if you were to go beyond angel tax, it's the very fact that what's happened with Flipkart and Walmart, would you agree with what Arun is saying? Or you do see investors sometimes worry about flip-flop, they worry about these kind of decisions that are taken without consultations with all stakeholders.
Yes, I would fully agree with Arun. I'll add a couple of nuances and some context. You're aware of the IVCA, right? The Indian Venture Capital Association, of which leading VCs like Blume and many others are very actively involved. We had the annual summit in Goa just exactly about a month ago. Karthik was moderating a panel with Shri Ramesh Abhishek and other individuals, senior government officials. I think at the top level they absolutely get it, right? If you look at the nature of the panel discussion, they're saying the right things. They want to be startup friendly. We're in fact looking to see how we can learn from Singapore and make India the preferred destination. So, sound bites and key takeaways are all there. I think what happens is that, in the maybe at the levels below, or that doesn't unfortunately percolate down. So absolutely, I think, issues like angel tax, they have to be carefully thought through, and, just think about, the life of a startup, right? There is nothing more difficult. You're trying to build a new product, you don't have capital to hire the best employees, you're not taking a salary yourself. And then on top of that, if you're burdened with things like, angel tax, where it's nominal and you don't even have cash flows to show, where are you going to pay for that from? I think there's a bit of a dichotomy in this. I think at the highest level, government officials get it, and are saying the right things. But when you get these, when Karthik, Ashish and I get all these missives from our startup founders that are getting these IT notices, then that's an issue. So I think we can bring it together. The IVC is doing a wonderful job of making our collective voices heard, and we really need to get there, because we want more companies domiciled in India. We don't want them necessarily running to Singapore or to become Delaware C Corps, but startups are going to go to the path of least resistance and going to try to improve the odds of success. So yes, we need to become far more streamlined and become far more startup friendly in terms of action, not just in terms of intent and in terms of words.
Okay. I take both your point, gentlemen, but let's get to the specifics now. Arun, as per the venture intelligence data, e-commerce has been the most funded sector, and number 2 we've got Fintech. Can this continue into 2019, given all the news that you've had around these two sectors? And boy, there really has been a lot of news, whether it's the new rules for e-commerce companies, whether it's even the fact that what kind of news flow we've seen around Aadhaar, which is going to impact fintech, KYC, all of that that's been coming out. Are these two going to still be the biggest sectors with e-commerce ruling the roost in 2019? What's your projection?
Sure. So in terms of 2018, the data was very clear. E-commerce was really up there, especially in the second half of the year. It bounced back quite strongly. In the first half, actually, we saw B2B kind of companies, enterprise technology, kind of 50-50 between them and the B2C companies. But really, towards the end of the year, consumer startups really attracted the bulk of the capital and finished the year with as much as 60%. So very clearly e-commerce was there, up there, and then followed by fintech. And like you rightly said, fintech has its own challenges. But in 2018, at least the lending segment within fintech was very hot among investors, both consumer lenders as well as lenders to B2B like lending cart and so on, attracted quite a bit of capital. And then we saw quite a bit of investments into the health tech space, which was not very hot even earlier. So the likes of CureFit and others, for example, attracted as many as 60 investments, and then the remaining actually went into what is called deep tech startups, which is an emerging space of hardware, IoT, AI kind of driven companies, and I don't see why that will not continue into the new year. And of course, companies like Topper and Byjus, of course, led the EdTech wave as far as 2018 is concerned.